let's just get more perspective on oil and indeed what's happening with commodities. And I'm joined with prominent bull on this, Jim Rogers, chairman of Rogers Holdings and author of A Gift to My Children. Jim, thanks for coming along. All right, let's talk about this. I mean, so surely Saudi Arabia can make up any shortfall from Libyan supplies.
No, they cannot. Saudi Arabia's been lying about their reserves for decades. Saudi Arabia, the last two times, said we're going to increase production, and they couldn't increase production. They told George Bush they couldn't increase production, and they cannot. Don't fall for that. The reason oil is going up is the world is running out of known reserves of oil.
Okay, so that $100 a barrel now, we were 75 only about 6 months ago. Do we go up to and breach that 148 record that we had?
Eventually we will, yes, there's no question. I mean, I don't know what's going to happen in the Middle East. If it all blows up tomorrow afternoon, it'll go there next week. But if it doesn't, if it calms down, oil will go back down for a while. But the world is running out of known reserves of oil. These are simple facts.
Jim, you've got a new fund that you're launching. I mean, how does oil fit in that? And do you buy the companies or do you buy the physical stuff?
Well, this is for stocks because many people don't want to buy commodities themselves. So these are the commodity stocks, the prominent companies in the natural resource
so the
area.
Shells and the BPs of this world.
Yeah, you know who the big names are, and then this is all in agriculture, mining, alternate energy. These are the big companies, and for people who don't want to own commodities themselves for whatever reason, this is an alternative.
But Jim, I mean, we've had such a run-up with these companies. I mean, there's so much, even higher prices than this have actually factored in.
In bull markets, things go to prices which nobody can conceive of. Even me, I'm the bull. I'm telling you, at one point I'm going to sell out, and then they're going to double again. In the bull market in stocks, who would have thought that Cisco would have gone up 100 times? It did. That's what happens at the end of a bull market, and that's what's going to happen at the end of the bull market in commodities. It's still several years away.
Okay, I mean, we were talking a couple of years ago. You were talking about $2,000 for an ounce of gold. We're not there even now. You were predicting that in 18 months.
No, I wasn't saying. No, I said it's going to happen in the decade. No, you should go back and check your Bloomberg.
I will do.
Check your Bloomberg.
Yeah.
I said in the decade. Or gold will go to 2,000 in this decade. That's pretty simple as far as I'm concerned.
Okay, what about silver? I mean, this is
silver
one
will certainly go over 50. Yeah. The old high on silver was 50. Silver will go to new highs again. All these prices are going to go to absurd levels by the end of the decade, by the end of the bull market.
And of course, as Asia gets richer, of course, soft commodities, agricultural goods, that sort of thing, there's going to be a lot of pressure on those, and that's another thing that you're buying into.
It
so
is
it's just universal, isn't it?
Huge bull market in agriculture. Agricultural prices are still extremely depressed on a historic basis. The price of sugar has gone up 600% in the last 5 years. It is still 50% below its all-time high. 50% below its all-time high. Yet the scope for price increases in agriculture is staggering.
Jim, is there anything that you will stay away from when it comes to commodities?
Not that I can think of, no. And bull market, I don't want to be short or to avoid anything when the secular bull market is taking place. I will hedge myself by shorting something. I'm short emerging markets, for instance, right now. I'm short Nasdaq stocks, for instance, right now. So in the bull market, you don't want to avoid, you want to own everything, even the ones you think are bad, because that's where the great gains are. And you hedge yourself by shorting or selling something else.
Right. So with this all in mind, I mean, you look at what's going on and you see what's going on as far as equities go, and you're short, you say, some of the Nasdaq stocks. But why?
Because that's where what's been overexploited. I don't know what's going to happen to the world economy. I know if the economy gets better, I'm going to make money in commodities. If it doesn't get better, I'm going to make money in commodities because they're going to print money, print huge amounts of money. But I need a hedge, and that's why BBVA and CTEC and I have come up with this new index. It's a new way to participate. In the 70s, most stocks did badly. The only stocks that did well were commodity stocks. That's what's going to happen again.
Right, and with all that, man, that means that there's actually a change in the way the world operates. And I think you've been talking about this for the last, well, I don't know how long, but I mean, 2 years ago I talked to you about this and how everything was moving from financial services to actually people who really make the stuff.
The farmers are going to drive the Lamborghinis. I mean, it's simple stuff. The stockbrokers are going to be driving taxis. The smart stockbrokers will drive tractors for the smart farmers who will be driving the Lamborghinis. No, there's this major shift. You see what's happening to agricultural prices. You see what's happening to oil prices. You see what's happening to metals prices. This has got a long way to go, and that's the major shift that's taking place.
And that shift also represents, I guess, a rebalancing of the global economy, too.
Oh, yes, yes. No, Canada's going to do better than the U.S. Australia's going to do better than Belgium. Some people will benefit enormously from the shift that's taking place. Some people will suffer. But that's the way history has always worked. You always have some people doing better and some people in decline.
So where's gold prices go up? You still short dollar or just negative on the dollar?
No, I own some dollars now because there was a big panic, a huge drop in the dollar, and I stepped in and I bought some more dollars. I do sometimes like to buy things when they collapse, and sometimes I get it right. Sometimes I don't. Sometimes I lose money. But at the moment, I own some dollars.
Jim, thank you so much for coming in. Pleasure to have you
My
in
pleasure.
as ever. Jim Rogers there from Rogers Holdings.